Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 top analyst utility stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. We are seeing some volatility in the market this week over growing concerns around valuation in the tech sector and of course the ongoing government shutdown. So today I decided we're going to take a look at the utility sector, which is largely considered a defensive sector during uncertain times like this. Specifically, I narrowed in on some top analyst stocks. These are companies that have recently seen ratings from 5-star analysts and also come in with a strong buy consensus. I found these under TipRank's top analyst stocks page. Found right under the Ideas tab, here you'll find a collection of stocks with ratings from top analysts, as well as which sectors have the most buy ratings. Up top, I sorted into the utility sector, which narrowed down my list to just 4 stocks, and only 3 of them have an overall strong buy consensus. You can check out these top analyst stocks on the TipRanks website or right on the TipRanks mobile app, which you can download using links in the description below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these 3 utility stocks. First up is PPL. They trade under the ticker PPL, currently priced at $36.77 per share. The stock has gained 12% in the past year and is slightly in the green over the last 3 months. Based out of Pennsylvania, PPL engages in the generation and distribution of electricity. They operate through various segments, including PPL Electric Utilities, which serves customers in Pennsylvania, and PPL Energy Supply, focused on generating and selling electricity. They also have a significant presence in the UK energy market through their subsidiary, Western Power Distribution, which provides electricity distribution services across several regions. The company has paid a consecutive dividend for 24 years and looking forward is anticipating a 6 to 8% growth rate through 2028, with a current quarterly dividend just above 27 cents per share for a yield just shy of 3%. They just shared their third quarter earnings report on November 4th, where we saw an earnings and revenue beat, and they said their Pennsylvania data center demand jumped 40%. Earnings per share of 48 cents beat estimates by 2 cents per share, while revenue climbed to $2.24 billion, beating by $50 million. The company is on track to complete $4.3 billion in infrastructure improvements this year and projects $20 billion in infrastructure investments through 2028. Just before that quarterly earnings report, a 5-star analyst from Wells Fargo initiated coverage on the stock with a buy rating, saying that the stock is seen as an overlooked beneficiary of load growth and a key resource adequacy play with multiple pathways to accretion. With 9 current analyst ratings, PPL comes in as a strong buy with 7 buys and 2 holds, and an average price target just shy of $42 per share, which implies an upside potential of nearly 14%. Looking at those price targets down below, they range from an upside of 3% up to 19%. Second on our list is a company we've touched on before. That is NiSource. They trade under the ticker NI, currently priced just shy of $43 per share. They've gained over 22% in this past year, and in the last 3 months are up slightly about 1%. NiSource operates as a fully regulated utility company out of Indiana. They operate through their subsidiaries, providing natural gas and electric services to approximately 4 million customers across 7 states. They focus on sustainable energy solutions and infrastructure investment, primarily through their core products and services in the natural gas distribution and electric utility sectors. They were founded back in 1912 and have grown through mergers and now employ about 7,500 people. NiSource has paid a dividend for 30 consecutive years and has been growing that dividend for 14 years straight, with their most recent quarterly dividend being 28 cents per share for a dividend yield of 2.6%. Their latest quarterly earnings report was out near the end of October, where they did have a revenue beat, but a slight miss on earnings. The company outlined a $28 billion 5-year capital plan and foresees an 8 to 9% earnings per share growth rate through 2033. Earnings per share of 19 cents fell 1 cent short of analyst expectations, while revenue of $1.27 billion did come in ahead. They announced a breakthrough infrastructure agreement to construct 2 combined-cycle gas turbine power plants and 400 megawatts of battery storage capacity in Indiana, and reaffirmed the upper half of their 2025 earnings per share guidance. And following that earnings report, we did see a 4.5-star analyst from Jefferies upgrade their rating on the stock to a buy and increase their price target. They stressed that the company's 8 to 9% earnings per share guide through 2033 only reflects the announced $7 billion data center capex through 2030, tied primarily to the 3 gigawatts signed, noting that there's up to an additional 6 gigawatts of DC pipeline. NiSource has 11 current analyst ratings, coming in as a strong buy with 9 buys and 2 holds. The average price target of $46.55 implies an upside potential of 8.4%. Looking at those price targets down below, they range from a slight upside of 2.5% to a high-end upside of 16.5%. If you've made it all the way to our third stock today, then do me a favor and make sure you've hit that thumbs up button. Third on the list, we're looking at Xcel Energy. They trade under the ticker XEL, currently priced at $81.87. Their stock has gained over 22% this past year, jumping up recently, gaining 10% in the last 3 months. Xcel is a leading public utility company headquartered in Minnesota, delivering safe, reliable, and affordable electricity and natural gas to approximately 3.9 electric customers and 2.2 million natural gas customers across 8 western and midwestern states. They were founded back in 2000 through a merger and now employ 11,000 people and focus on grid modernization, renewable integration, and customer-centric energy solutions. They've been paying a dividend since their formation in 2000, so about 25 consecutive years, and have been increasing that dividend for 21 consecutive years. Their current quarterly dividend sits at 57 cents per share for a yield of about 2.8%. Their quarterly results on October 29th came in below expectations on both earnings and revenue, but the stock still gained after they updated a $60 billion capex plan. It'll focus on clean energy goals and system reliability, including 7,500 megawatts of zero-carbon renewable generation. They did reaffirm their 2025 earnings guidance, but their quarterly earnings of $1.24 fell 8 cents short of expectations, and revenue came in at $3.92 billion, missing by just $30 million. Just this week, we heard from a 5-star analyst at Barclays who increased their price target. The firm believes that Xcel's valuation can accelerate towards a sector-high premium post their Q3 report. The company's wildfire risk subsiding while investors get 9% earnings growth today. Xcel Energy has 15 current analyst ratings with 13 buys and 2 holds, coming in as a strong buy. And the average price target of $89 implies an upside potential of 9%. Looking at those price targets down below, they range from an upside of 5% up to 18.6%. So that is a quick look at 3 strong buy utility stocks, all with recent ratings from some top analysts. Let me know your thoughts on these 3 companies, and if there's other stocks in this sector that have been catching your eye lately. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a wonderful day. I'll see you back here next time.